Okay, guys, this is Pat the analyst. I want to quickly check on the update on BTC based on the last video we made on BTC on the YouTube channel. Right? So what I'm looking at right now, like what I discussed, then we're having BTC trading above this place. So I said, if you look at the candlestick chart, I said one of the move that is likely going to happen is maybe we can, before we take up all we are looking at, we say we want market to come above this resistance here. We want market to, oh my god, sorry, my network is off, so I can't draw my chart. Sorry. So we said we want market to come above this resistance here before we start looking for a buy. Yeah, we're waiting for market to come above this resistance that we have drawn here before we start looking for buy. Then we're having market here when I made the video. So we said we are waiting for market to come above here before we wait for a retest and then we start looking for buy. And that's why I advise us not to buy yet until market is trading above this resistance. So if you follow my advice, you won't be caught up in this little dip that are currently happening now. So what I discussed that I said is either market from here goes up and break this resistance, then retest it for us to buy, or the next thing you can expect is for market to come down and create sort of like a head and shoulder pattern, because that's what's currently obvious on the chart right now. So we'll now have a push and a retest and a buy. So all still the same, whichever one you are looking out for is still going to be waiting for market to break above this resistance, which is around 82,300 and above, and then a retest and then buy. So let's not try to catch the whole thing at a sniper entry level or this perfection. When you are trying to look for perfection, which does not even exist anywhere in the market, that's when you tend to lose money. Don't look for perfection. Always wait for a clear setup. So basically, what we have seen here now is that okay, the market has come down and still currently ranging within that head and shoulder pattern region. We can't conclude yet. So, but what I'm looking out for is once market take out this low here, automatically I am now fully bearish bias, and the next target I'll be having for BTC market take out this low here. Anything that makes market goes below here, which is 45,600, you can even want to set your alert. Once you see market trading below 45,600, that should tell you that hey, the next point of target should be $41,000. I'm sorry, but that's a fact. The next point of target should be $41,000. How and why did I think that? Yeah, this might look like a retest or a mitigation to you because of this week here. But like I keep saying, when you want to look at the true information of the market chart, try to use the line chart. So if you go to the line chart, you won't see any drop around here that the wick was actually showing. So whenever you have a sharp drop and an immediate reset, is more like a flash dump. That is when you have wings like this created. So line chart don't keep note of wings like that. Okay. So because of this, if you are viewing the chart from the line chart perspective, you will see that truly there are some levels of orders that need to be mitigated here. This one, we call them demand and supply zone. So there's a level of demand zone here that needs to be mitigated, another level of demand zone here that I've marked. That's 43,000 and 40,000 within 41,000 and 40,000. Sorry, let's say 41,000 and 43,000. So those are the demand that needs to be mitigated. Yes, why do they need to be mitigated? Because they were the demand zone that were created for orders to be stacked up before BTC was able to push as far as from 42,000 all the way up to 66,000. So there is a reason why you are seeing this market coming down back. It is because they want to mitigate this demand zone back up again before we have a blast to the upside. So if for now we are still intact. In fact, we are still intact in the sense that if I apply the FU strategy, which I usually talk about, this is still within our buy region. BTC is still within our buy region as far as FU strategy is concerned. What's FU strategy all about? FU strategy is telling you that this was a support level that the market pierced through and giving us a fake sell signal. This is actually a fake sell signal because a lot of persons must have think that this is a breakout from the support level and they started selling, and then the market came back up and revived immediately. So that's a fake sell signal, and that's what an FU candle looks like. So if you can kind of like measure it, this is more like a finger, a finger, a finger, and the let me not use that F word. You know what F is? FU. Okay, this is an FU finger, okay, that is protruding out of the whole folded finger. So for the FU pattern to be complete, market has to probably like go up like this, and that's when it start looking like an FU. You know what an FU is. I don't want to use that word because I'm uploading video to YouTube. An FU is something like this. You have 4 fingers that create FU. Be how many fingers? 5. You have your 5 fingers, your thumb, I don't know what the other finger is called. And the middle finger is what you use to do your FU, and then you have the remaining last 2 fingers at the left like this. So if you turn this upside down, it looks exactly like what you are seeing here. So you see 1 finger, or let's say 1 finger, 2 finger, okay, then 3, then you have an FU here, and then this completely 5 or whatever. It does not really matter, you want to count it or whatever. So the only time that this FU whole perspective will be invalidated is when you now see another finger protruding longer than this former FU finger. So that's why I say once market started trading below 45,600, it is a sign that we are going to go down more. For now, we are still within a bullish, confluence, but that doesn't give you the whole confirmation to buy or the whole guarantee to buy. So the guarantee I want you to wait on before you buy is when BTC break out of this 48,400 region and then retest the region, then you can buy. Anything aside this, don't do it. Why? Because this region is also a flip zone. It's also a flip zone region because naturally market is supposed to come down and tap into this block here. This is a demand zone. So market is naturally supposed to tap into this demand zone and pump. But rather what happened, the market pierced through it. So we say when a valid demand zone is violated, that demand zone start acting as an opposite side. So it start acting as a supply. So that's why you see market now tap into the former demand zone, and now the demand zone is now acting as a supply, and that's what's currently pushing the market. So until we start trading above this demand zone, you have to keep things intact and still believing that we are still in a bearish buyer's market. I don't know how you look at the market, but this is how part the analyst look at the market. So this is my conclusion. In summary, if you want me to summarize it again, we are waiting for market to either come above this box here, which is around 48,100 or 48,300. Market to come above it for us to change our mind from a bearish bias to a bullish bias. Meanwhile, we are still within a bullish conference, or what will I put it, a bullish zone. So until the market start trading below this last low here, which is 45,006, until market started trading below 45,006, that is when we will conclusively enter into a bearish bias. And once we are conclusively enter that bearish bias, it is going to be a conclusion that market is going to take us as far as 43,000. It's going to take us down to as low as 43,000 or 41,000. So this will be our next point of interest where we'll definitely be buying the market from. Okay, so what you are supposed to wait for now is set 2 alerts, one at 45,600 and one at 48,300. So if market cross 48,300, that means the market is now bullish. If market cross 45,600, that means the market is going to dump more. Trust me, it's going to dump to 43,000. Trust me on this. So our next point of interest where we would like to now react the market, we're going to be $43,000 or $41,000. Upon getting to 43,000, are you supposed to buy? Yes, if you are a DCA trader, somebody that has enough equity to buy and keep buying the dip, you should buy that. So when people tell you buy the dip, it's not all about buying the dip. It's about buying the bit as a significant price area where price is supposed to work, or where price has the higher probability of reverse. You don't just buy dip blindfoldedly. It's not only when market dump you buy dips. You buy dips at significant area, and the significant area is what I'm matching out for you now. That if any dip you occur from here further, don't buy around 45,000 as a dip. Don't buy around 44,000 as a dip. Buy from 43,000. When market gets there, you buy more. If market gets to 41K, you buy more. Okay. Another point of DCA, which is still very, very possible. I don't know, but it's actually very possible. Another point of DCA is somewhere around $33,000. That's not funny, and I'm not praying for that anyway. So I'm expecting market to push up from 43,000 or 42. Don't relent. It's either market taps into these two lines, or if market did not tap into the tool, I will have a blast to the upside. I will take out this resistance level because from retail trading, that's a resistance level, and then we'll have a retest and then we'll blast. This blast, like I said, for my previous, this blast can take us to as far as 58 to $60,000. Yeah, it's very possible to achieve 58 to even $66,000. Yeah, so that's my conclusion. I like viewing market from line chart perspective because it actually shows you the details of the market. That will be all for now, guys. That will be all. Sign out.